Okay, good morning, ladies and gentlemen. Bon dia. Such a pleasure being here in Rio for the very first time. And our panel today, as Etna mentioned, we'll be talking about decarbonization and the energy transition, which I feel has become a very mainstream topic, but unfortunately, there's still a gap in understanding on what the energy transition is. A lot of people think that you can just shut down one source of energy and skip to the other without going through a process. And we'll be discussing many of these elements with our excellent group of panelists today. Allow me to introduce Musaab Almulla, sitting next to me, the VP of Energy and Economic Insights of Strategy and Market Analysis at Aramco. Welcome. Riham ElGizy, the CEO of the Voluntary Carbon Market. Welcome, Riham. Leo Yamamoto, the Executive Director of Mubadala Capital. Welcome, Leo. Marcos Bulgheroni, the Group CEO of Pan American Energy Group. Welcome. Musaab, I'm going to start off with you. Sustainability is not new to Aramco. But I do want us to, for you to walk us through the sustainability efforts that Aramco is going through and how you allocate finance to decarbonization.
Thank you, Amena, and great to be in the FII. As you mentioned, for Aramco, the capital deployments for sustainability started since the 70s. For those who don't know, the 70s, we have what we call the master gas system in Saudi Arabia, where we capture the associated gas and basically use it for as a sales gas to the whole economy in the country in Saudi Arabia. And at the 70s time, starting the 80s, is where basically the boom of the kingdom economy, where basically power generation is needed, as well as the industry. So gas is very valuable component at that time. But at the same time, when you capture that flaring, this means you are reducing the carbon intensity at very high rate, basically. And this is how we achieve the track record when it comes to the carbon intensity, because the main problem when it comes to the oil and gas is the flaring. And when you reduce the flaring and methane, you are solving the problem on this industry. So when we did our capital deployment since the 70s, we focused on how to minimize our flaring and put our money on that front. It's part of our capital formulas in Saudi Aramco. Then, after that, we decided to also put net zero, ambitious by 2050, and we decided to put interim target by 2035. Mm-hmm. So we did not stop at the level of carbon intensity we are today, which is 9.6 kilogram CO2 per barrel, mm-hmm. But also we are putting a target of reducing it by 15%, going lower to basically by 2035.
Would you say you're on target, Musaab, for this?
We are absolutely in target, but mm-hmm. Also this year, and it's not promoting things, but it's good for the people here in the room to read Aramco Sustainability Report just published 3 weeks ago. Mm-hmm. We also did a pilot to look to our oil intensity and cargo, basically having a cargo for Arab Lights, which is one of the main grades that we sell to the globe. The Arab Light is a key crude component, and we pilot the concept of offset, capitalizing the carbon credit we purchased from RVCMC in Saudi Arabia, mm-hmm. But also we learned through a third-party verification that our oil intensity, which is published in the report, is in the range of 2.4 kilogram CO2 per barrel.
Is that very competitive for people who are not aware?
If you look to the whole industry today, it's 45 kilogram CO2 per barrel. So you can imagine the difference between 2.4 to the all average industries, which is 45. So this is part of the progress we did, but also moving forward, we have 5 levers when we come to our decarbonization. The first lever that we have, which very important for the industries to focus, is the energy efficiency. And in Saudi Aramco, we deployed what we call it cogeneration. So we produce power and steam to increase the efficiency of the production of power generations within our facility, but also the steam production. And we have the size of 5 gigawatt of cogeneration, which is like utility scale of assets in the power generation side. The second pillar, lever, is minimizing further flaring and methane to make it near zero, what we call it near zero, almost zero. And this is a lot of initiatives in that space, which basically to move toward the 15% target that we talked about. And the third one is renewable. As His Excellency Armayan mentioned, 50% of the power generation capacity in Saudi Arabia will come from renewable, and we are part of that journey. We are investing with Aqua Power as well as with PIF on the investment formula renewable by 30%. So that's the third lever. Fourth lever is, which is very important, is the carbon capture and storage, because we believe that there will be oil. It will continue to be in the world. So removal part is very important. And carbon capture, we put a plan of 9 million tons CO2 equivalents per year to capture by 2027 annually, which is the biggest in the world. And the fifth lever, which is we consider it complementary to all these 5 levers, is the offset, which is the conversation about the offsets probably today that maybe Riham will talk more about it in the carbon credit
That's
side.
a great segue, actually, if you allow me to bring in Riham. Riham, I know that you've had quite a big experience in launching the first voluntary carbon markets, especially in working with Saudi Arabia on this. I want you to tell us a little bit about that, because in terms of securing finance for decarbonization, it really starts with pricing carbon. Tell us your experience in launching the voluntary exchange, and where is it going next?
Well, absolutely, and before starting, I see Richard Athias over here, and I want to say congratulations on a very successful FII over here in Brazil. The conversation, and we saw President Lula yesterday when he talked about climate, how it is important for Brazil, how it is important for the world as well, and how there is a disparity between global north and global south in terms of spending. Let me start by talking as well by the voluntary carbon market in Saudi Arabia, which is going to be a global leader in the global south in specific. The journey of the voluntary carbon market in Saudi Arabia is like the journey of 2030 vision. It is a very ambitious vision, and Saudi Arabia is going day in, day out, exerting a lot of effort in execution that vision, and voluntary carbon market is part of that, is part of the green initiative. The company is 80% owned by the Sovereign Wealth Fund of Saudi Arabia, 20% owned by Saudi Tadawul, which is the stock exchange of Saudi. When we started our journey, it was a year and a half ago, there was zero supply, zero demand. So we started from a purely green field. And when we looked into it, we thought, okay, how do we tackle this? How do we build our own voluntary carbon market? How do we make an impact, first in Saudi and then globally? And we tackled that through first 2 pilot auctions. The first one we have done in Saudi Arabia, where we auctioned 1.4 million tons, which is equivalent to 250,000 family cars driving all year long. And 16 companies has participated in that, including Saudi Aramco. And that established that there is a demand in Saudi Arabia. That was the biggest auction in the history of the markets at that time.
So you created the supply, the demand followed.
Yes, I think the demand should come first. And what we did, and that is very important not to look in Saudi only, because our vision is not only in Saudi Arabia, but beyond. We took the second auction in Kenya, in Nairobi, and the reason we wanted to do that is to draw and shed a light on the African carbon market. And this is how we're making an impact. We sold 2.2 million tons. 75% of that came from African credits. And when we talk about African credits, we talk about communities, about indigenous people, about bringing electricity, rehabilitation water systems. All of that impacts people. And it finances projects that otherwise would have been uneconomic without carbon credit offset as a revenue stream. So this is what Saudi Arabia is doing. We are aiming to be one of the biggest markets by 2030. That is our vision, and this is what we're going to execute and implement. Our vision is not for Saudi, but beyond Saudi, to be leaders globally. And this is a quick snapshot about what we're doing. One last thing, we're launching our exchange later this year. In 4Q, around the time of COP, is going to be the first spot exchange in our region. And then we're offering as well an auction alongside that. Can you stay tuned for the coming auction and the exchange launch later this year?
No, it's very exciting news, and I'm glad you mentioned Africa, because there's a lot of pressure on Africa to stop its upstream activity when Africa as a continent only emits 3% of the world's emissions. So that's something to put into context when we're talking about Africa. Leo, at the end of the day, it's about returns on investment. Are decarbonization projects profitable?
Look, I think the first observation is that the only way to allocate capital at scale, and that scale is what we need to fight climate change, right? It's not millions or billions. We're talking about trillions of dollars that need to go into fighting climate change. And the only way to do that is if the project, the sector, or the company is financially viable. Now, we see incentives and we see tax breaks and subsidies. They work and they help new technologies get through the breaking point. But ultimately, if there's not a substance in the end, if there's not a long-term vision that it will be profitable, we see very little capital flowing through. And given that that's what we need, what we try to do as project developers and allocators, we try to combine the existing technologies, the emerging technologies, the most efficient places in the supply chain, so we can develop projects that can give very healthy returns, taking all the risk of development in that composition. So as an example, here in Brazil, we have a fairly large, fully integrated biorefinery that we are developing in the Northeast. So that's one of the projects that we spent more than 10 years developing it, because we had to find the right location, we had to find the right technology, the right partners. But now we are in a point where we truly believe we can have a molecule in the end of the day that is renewable, that even captures carbon in the process of growing the trees, and is cost competitive. So there is enough returns there that justifies not only us as Mubadala, but all our partners, our financiers, the local government and federal government to back us up, because we could find that equation. And I think as this example, there's many other projects like this that can be developed. And the moment you have that, the moment you can combine technology, efficiency, and supply chain, you can really unlock substantial capital, and you can drive the change. So I believe that's likely the future for
I
for
think it's
industry.
not about reinventing the wheels to some sense. If we have facilities that already produce energy but require some technologies or investments to clean them up, I mean, why don't we work to decarbonize? And if they make money, that's even more incentive.
That's a fantastic topic, and again, the way that we see it as Mubadala Capital, that's exactly the other piece of the puzzle that globally, a lot of people avoid. Because in one front, yes, we can develop new sources of energy, we can develop solar farms and wind farms, and that's going to be green and that's going to make a difference, but that's not enough. Mm-hmm. As a world, right, we are consuming more energy than we are able to bring up with renewables. Big numbers, right? We are consuming around 20 petawatts hour of energy in the past 10 years. That was the growth in the demand for energy, and less than half came from renewable. So we are not going to win the fight that we need to win just by bringing in new renewable sources online. We have to fight with the existing industries, the ones that are high polluting, and we have to bring private capital to make a difference. Just as one example there, 4 years ago we acquired a refinery, a crude oil refinery in the northeast of Brazil, and together with our investors, the moment we were doing that acquisition, we created a plan on how we're going to make this more efficient, how we're going to bring this refinery, from the bottom 5% of efficiency globally to a place where you can feel proud about. And the capital that goes there can make an enormous amount of difference and can be as impactful as developing new renewable sources. So I truly believe that as an investor, it's part of our responsibility to find those projects, to find where money and investments can make a difference to decarbonizing high emission industries, because that's another piece of the puzzle.
That's the bottom line here, is just keeping an open mind and investing in all forms of energy because we actually need it. Marcus, I want to bring you in as being the CEO of Pan American Energy Group, and it's the largest oil private company in Argentina. Can you talk to us about your experience and what you've been doing so far in terms of decarbonization?
Okay, thank you, Amin, for the invitation. Let me first address some of the things that has been discussed here in terms of how the industry is viewed and what is the role that the industry should have in this transition. Clearly, the last couple of years, I would say, have been very challenging because there's an extreme vision of where we should stand. But there is no doubt in my mind, and I think the industry slowly and very resiliently has shown that we are right front center at the energy transition in terms of our role. I mean, we have to continue supplying secure, affordable, accessible energy for 8 billion people, and we have to do it, and, I underline, have to do it with the lowest carbon content possible over time. So clearly, many of us believe that, that this is going to be done if we look at it as a transition where different technologies and different solutions are going to coexist over time, and they're going to compete, and that's fine, and they should. And in this case, in this context, is that some of these technologies already we know about, solar, wind, some are scaling up, such as hydrogen and others, but oil and gas will be part of this mix of energy that will be given to the world with the objective of lowering the carbon intensity over time and reaching the decarbonization of the matrix. So oil and gas will be part of this. And in particular, gas, I think, is something we should focus on. We at Pan American do so, and I'll get that to in a minute. But natural gas being obviously a very abundant and relatively cheap source of fuel is obviously very important. It also works very well with renewables. I mean, solving the intermittence issue that is very hard to abate. And I would say through the development of LNG, through this global trading vector, it can reach basically all of the different countries in the world, some of which don't have abundant resources, and in particular natural gas, and help them decarbonize and, let's say, replace coal over time, as well as secure, bring them their energy security. So in this context, I think Latin America has a big role to play, as well as the Middle East, but in particular, we have a wonderful shale basin, Vaca Muerta. We have here the governor of Neuquén, which is a protagonist in this basin. And because of the resources, we're talking about 300 TCF of shale gas, we have no other choice but to develop this globally, okay? Clearly, as I said, we are a big player in this space. We're probably the second or third largest producer of shale gas. We produce about 20 million cubic meters a day. For the Anglo people, that's about 670 million scuffs a day, and we're moving into almost 900 million scuffs a day. And this type of resource, this Vaca Muerta, is definitely going to allow, or I would say, is going to define a very large LNG export project that Pan American and other companies are working on. So in this respect, placed with natural gas as a source of transition fuel, we also have in Latin America fantastic wind and solar resources which work very, very well. And a lot has been done, I think, in the recent years. Installed capacity has grown tremendously from 20 gigawatts to about 70 gigawatts in the last couple of years. And I believe that that's the way that our region has to lead into accelerating to net zero.
Really a comprehensive strategy there. I hate to be timekeeper on such a rich and interesting topic, but we only have kind of a minute each, so I'm going to combine the last two questions, and if you could just take a minute to reply to them. I want you to identify the biggest challenge in securing finance for decarbonization and give me a solution. Musaab.
I will talk about the challenge to be quick, but
Sure.
the solutions is very difficult. I think the challenge is scale and deployment. The scale, when we talk about energy transitions or financings, McKinsey talking about $4 trillion a year by 2050. It's the unfortunate, that's the scale, I would call it, because the scale is huge, especially that there is still energy addition. There is energy transition, but there is energy additions. So the scale will be very, very challenged to the financing. The second challenge is the deployment today. In 2022, $1.1 trillion being invested in energy transitions, 85% to renewable and EVs. CCUS was only 0.6% and hydrogens of that total transition. So there is an issue on financing on the deployment side. It's focused only on EVs and renewables. It's missing other technology menu that's very important and critical on the energy transitions. The solutions, I think financing should be, especially from banks. Banks will be the financing of projects coming in the future needs to be technology agnostic. They don't focus only on green solutions. They look to all technologies that will reduce carbon emissions. I think that's very important and critical on the solution side, just to be quick.
Rahab, if you have Aladdin's lamp here to help you, advance carbon markets even further, what would you wish for?
Okay, I'll say a couple of things. I'll try to be very quick.
Sure.
First of all, just to let everybody know, 5% of the global emissions come from the 50 poorest countries in the world, and 99% of the deaths because of climate come from these countries. These countries don't have the means to finance because cost of debt is very high for them. Voluntary carbon market is one of the tools to finance projects that otherwise are uneconomic. Blended finance is needed. I would like to say something else. In Saudi Arabia, we've been very innovative. So one of the things that we came up with is the first ever fatwa to allow for carbon credits to be a backing for Islamic finance. Islamic finance in Saudi Arabia is $500 billion a year, $2 trillion globally between Islamic nations, and we got that from the Islamic Development Bank to enable carbon credits to be used as a backing commodity. One last thing I would like to say, and it's a famous poem, but one of my very favorite poets, which is C.P. Kavavi. He is an Alexandrian Greek poet, and he said that the journey to Ithaca matters. So a lot of companies have committed to net zero by 2050. What matters, the destination we all know, but what matters is what we do from now till the journey is, till the destination is reached, and the journey matters. Using carbon credit offset as a complementary tool to accelerate decarbonization efforts matters. The destination we all know, but what we do in the journey to the destination, as per the poem, is really important.
It's a beautiful point, Rahab. Short of a fatwa, Leo, what else could we do to secure finance for decarbonization?
Look, we need to create incentives, and we need more players to look at high polluting sectors and take control of those. Because only with responsible ownership, you can drive the change we need. We have to combine all the tools you have. I agree with 100% of the other panelists. Like, those are very important ways that we can drive decarbonization. But we also need private actors to take control of high polluting assets, bring in new capital, bring in new technologies, and make the difference there. Because only by combining those things, we can actually achieve the net zero we're looking for.
Thank you, Leo. Marcus, the last word is yours.
Thank you. So I'll just briefly mention two issues. The number one of the challenges we see in the industry, at least in our part of the world, has to do with infrastructure. There's a bottleneck. The resources are there, but we need to have them reach to the market. And I think in this case, a regional view is very important, because at the end of the day, resources in one place, the demand is in another place, unless we see it in other country, unless we see it as a regional view, I think we'll be missing the big picture. If we see it as a regional view, we'll certainly find the resources to do it. And the second one, really, no big surprises here in our region, have to do with instability, or let's say variability of our macro, and that has to do with our governments. And in this case, I'm very happy that yesterday in Argentina we approved the law that I think is going to be very important to foster the development of some of the regional infrastructure projects, as well as some of the projects in the industry. So clearly, pieces of legislation, the one that was approved yesterday by the government, will help development of the industry.
Policy definitely plays a big role in this, and I would just lastly say that we should stop demonizing forms of energy and just focus on cutting emissions. Thank you very much to our panelists. Thank you.
Thank you.